Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is going to be the Friday strategy session. Today, we're going to talk about how to trade our 9 EMA strategy, the Bollinger W strategy, and Fibonacci. We're going to go over a few Fibonacci retracement strategies, one that I use personally. It's sort of my own. I don't know if I'd call it secret sauce, but it's definitely something that's sort of unique to my own methodology. So good to see everybody back in the room. I know it's sort of a lazy Friday. A lot of times on Fridays, we don't see many traders show up ready to go, and that's one of those things that I would really urge everybody against. If you're going to trade, show up ready to trade. And if you can do that, and you do that as many days as you possibly can, you'll have an opportunity maybe to get some good trading in. All right, let's go ahead and look at a few things right off the bat. What I would like to start with is a little bit of a news event. We've got a lot going on here in the world, and this was a big time news story right here. We see all of our indices right now. We're on the rally. We're seeing a lot going on. We're seeing bids really fly into commodities, but we're also seeing bids hit risk assets. And given this type of news cycle, I'm very surprised to see stocks exactly where they're at. JC, good to see you, JC. One of these things that we're looking at right now. Now, listen, I listen to all forms of media. All right, I listen to all forms of media, and like I always say, I'm not a real big conspiracy guy, but I don't believe in coincidences either. And I saw this news story come across the board earlier today. Like I said, I listen to a bunch of alternative media, a lot of podcasts. I know a lot of us do that because a lot of the information you get on there is direct from insiders. And the insiders are saying right now that there's peace negotiations going on in Mar-a-Lago with President-elect Trump. Now, I don't know what's going on in those rooms. I don't know anybody down there, but it does start to make a little bit of sense. What have we seen this week? We saw the big ICBM strike out of Russia. We saw basically Putin running a test on their nuclear equipment, their nuclear arsenal, and saying, "Listen, you guys can't shoot down a missile going Mach 10." It was a completely new kind of missile, and it really has been a game changer here for these markets. Now, typically, you'd say, Shane, doesn't that mean gold goes through the roof and risk assets plunge because we're looking at World War III? And I'd say, at first I said, yeah, and then now the more we step back and we think about what happened. We saw the statement from Putin the other day. Now we're seeing the UN, the NATO chiefs down there meeting with Trump and Mar-a-Lago. A lot of folks are expecting a ceasefire right now. And I know the markets are. Take a look at the markets right here. I mean, WTI crude oil is going up, and that's great. That's fine and dandy. That's pretty much what you're going to see going into a weekend given this type of fragile situation. But you're also seeing a lot of bids flying to risk assets. And what that geopolitical uncertainty would do, if in fact you do hear a ceasefire announced until Trump's elected, then you're probably going to see a big peace deal where there's going to be a lot of money handed out for reconstruction of the Ukraine. Russia's going to get something. The Ukraine is going to get rebuilt. And the United States is, going to probably in NATO is going to have that uncertainty out of the equation that a lot of traders and investors are looking for. Manish, good to see you, Manish. Mark Corp, hey Shane, I watched the new video. I like the shaft. I put it on a few charts so far, so good. Well, I tell you what, thanks for checking out the video. We just put a new one out, the shaft. We just briefly touched on those 7 indicators. I like the EMAs. I'm an EMA and a Bollinger. The Bollingers are my favorite to scalp with. If in fact you're interested in playing breakouts or rotation, we might do some videos on that as well. But the shaft, I'm not well versed on the shaft at all, other than it's a momentum oscillator. But it's more of a complex type of an indicator. So right now, a lot of optimism flying around in the markets, and when we have optimism, we've got price action. And when we have price action, we can trade. So today's going to be a strategy session. I've got a few trades that are going right now. We were stalking that WTI crude oil futures trade, starting to look for a sell signal on that 5-minute chart. So hopefully we get one of those to develop with an RSI and 9 EMA. So today, if you want to go ahead and trade, you want to trade some of these strategies and put them into play, be sure to swing by Switch Markets, and you can go ahead and get after it with a 100% credit bonus. And that just helps with your, just makes your wallet that much bigger, gives you purchasing power. And if you've been in the markets any length of time, you'll know purchasing power is the name of the game. Here's one of the more popular videos we put out. It by far is the most popular that we put out on how to trade. And it's learn the 9 EMA strategy in under 10 minutes or whatever it is. And it's got a few views. I got a lot of questions on the 9 EMA. It's a really popular, really surprised at how many people are interested in trading the 9 EMA specifically. I like the 13 EMA. That's sort of what my bread and butter is on my charts. But 90, there's nothing wrong with the 9. I like EMAs because they're more current. They keep us really abreast of current price action. So if you're not up on the strategy, be sure to check that video out. What we're going to do today is we're going to address one of the biggest things, one of the biggest problems that people had, one of the biggest critiques that I got on that video. And I mean, there was, I don't know how many comments were in there, but a good portion of them, I'd say 30 or 40% of them were just basically, hey, this won't work. this type of strategy will not work. You cannot trade like this, yada, 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 yada. And I go, yeah, you can, but there's ways to make it better. Now, remember, the idea behind all these strategy videos is just to get you thinking. Like Mark Orb just said, he says, hey, I like the shaft. There's nothing wrong with the shaft. We're trying to show you things that you like. Now, everybody knows me. Everybody knows how I trade. I trade Fibonacci retracements, Bollinger Bands, and I look at my 13-period EMA. I wait for everything to converge, line up with market state, and then bang, I'm in the market or I'm out of the market. It is what it is. When I'm looking at a strategy like the 9 EMA, and I see comments that say, well, this won't work. I say, listen, make it work. My first job in the markets was to trade the Euro FX. I still remember being handed the order book saying, hey, listen, make this profitable. I was like, all right. So I took a look at the market. I took a look at our indicators and our signals and what I could do with it. And I did the best I could with it. And that was the job, was to make it profitable. So the 9 EMA on its own, without any sort of confirmation, you could certainly say, well, this is hard. I go, yeah, it's hard. But how you would trade something like this, like we presented it in the video, it's all about your risk versus reward. Find a market with it's an optimal time. This is 5-minute chart's a pretty good one for WTI crude oil futures during the U.S. session, and go ahead and trade it. Right there, you'd trade the big break right there at 7 a.m., 9 a.m. Eastern. Now, I've said this a million times on live streams, but it's okay. 9 a.m. Eastern, traditional NYMEX pit open for WTI crude. Look where the volume picks up. It picks up right at 9 a.m. Eastern every day. Every day. That's when you're going to see the flood of volume into the market. That's when I would start trading this thing. And if you did that, and we presented it in the video, hey, price breaks above the 9, just buy it. You'd have crushed it. All right? The thing that makes you a winner or a loser is how much money do you get on that trade. Stop loss right there beneath the swing low, letting it run at a 1 to 3, 1 to 4. You can make money doing that. Might be hard because you're going to take a lot of drawdowns. You're going to get a choppy price action, say right in here, when those volumes drop off and all of a sudden there's no directional moves. That's where you get into big trouble. You could have got out of the market right there. This would have been a short signal. Bam, you would have taken the short and you'd got stopped out. So that big winner and that smaller loser, that would have been a winning strategy. Now, I'm not going to sit here and tell you to trade that way because I don't trade that way. It's too damn hard. It's too hard. That means you have to maximize. You got to take every dollar out of those winners. Every single dollar you have to get out of it, and it's too hard. I found over the years it's too hard. That's why I cut my risk rewards way down, 1-to-1s. People laugh at me. They say 1-to-1s, nobody can do it. I say, yeah, you can. Yeah, you can. I'd rather do that than sit around and go, oh, I had a 1 to 4 winner going, and it only went 1 to 3, and then turnaround took me out. I'm not interested in trading like that, not at all. But this right here, if you want to trade just the conventional way, you can. Now, what we're going to do today is we're going to go ahead and qualify these trades with RSI. Now, the RSI is a pretty good. It's a momentum oscillator, relative strength index. Very simple. When it gets above 70, you're looking to sell the market. It's an overbought territory. When it gets below 30, you're looking to buy the market. It's an oversold territory. Right now, on this WTI chart, we saw oversold territory right here. We sold the market in here. Bang, got stopped out. That's a loser. This trade's a loser. Why was it a loser? Because our stop loss is going to be above that market structure, that previous swing high, somewhere in there. You know, you could have even played it a lot tighter. I probably would have recommended probably right there. Keep that loss as small as you can. All right, now what are we looking at? We're looking at potentially getting out of this thing or getting out of whatever losing trade we were in, and we're going to look to go short again almost. And I say almost because take a look at where our RSI is. We're creeping up towards 70. We're not quite there yet. Once we get over 70, we're going to look to send this thing short again. Hopefully, we get to execute that trade right here. Dre Day every day. Good to see you, Dre Day. Happy Friday. Hope you had a great week. But great week this week. Market was complicated, 100%. 100% Dre. This was a very difficult week to trade the market. I finally decided to trade the EMA from now on. Trend trade has been a big mess lately. When the markets start getting chaotic and whipsaw like they've been all week because of the Russia-Ukraine situation, you run into trouble trying to get in on big trends because even though the volatility is big and you get big moves, typically your stop loss is going to be formidable or pretty big. So that was an example of a trade that we're looking at right now, WTI crude futures. This is the January contract. A tremendous rally today, up almost 1.6%. Pretty much all has to do with geopolitical uncertainty, not even close. I mean, that is the market driver. We got another one going, though, this Euro USD trade. This is fascinating stuff right here. This trade came across the board a while back. This is a 30-minute chart. Boy, I tell you what, I wouldn't really recommend, unless you're seeing a news event or perhaps a really hyper volatile situation in your currency markets. I don't know that I recommend trading a 5-minute chart on currencies. More than likely, at least with this 9 EMA stuff, you're going to get chopped up because the market flattens out. This is a 30-minute chart. Ideally, you'd be looking for maybe a 4-hour chart. But once again, we're just trying to execute trades here and show you how this strategy works. So here's what happened. Basically, you saw the nice big wipeout here, nice big liquidity sweep lower. We're making a video on liquidity sweeps right now. That one's going to be out here in a few weeks. But you see this big sweep lower, took out a lot of stop loss orders underneath yesterday or this year's low. If you remember our Euro USD stuff, just go back, take a look at some of the live streams. I broke down some key levels. That low didn't work too well over 104.50. We got some love above there, right around 60. We got some bids, but once this area was taken out, it's definitely headed down. But right now we're right back almost to that level, 104.23. On this chart, 30-minute chart, bam, there would have been your sell-off. Okay, right here, this green line. That really shows you an RSI that's in a deep and oversold territory. So what are we looking to do? We're looking to buy the market. We want to buy. Well, when are we going to buy? 9 EMA, that's our trigger. That's what gets us in. As soon as the 9 EMA, we get a bar close above that area, then we're looking to go long. There it was right there. In our entries, not exact, but it's right in that neighborhood. So you could have went long right there, and you're pretty much sitting right around, I don't know, probably right around break even thus far. Now, what I would say about your entry points, and I got this question the other day, and it's a good one. Shane, what do I have to do? Do I have to go right on that bar close, that positive or negative bar close, up or over, that bar over the 9 EMA? Do I have to enter right there? And I said, no, you don't. You could wait for pullbacks. You really could. So what I would recommend is, if you're patient, you could wait for a pullback. You could wait for a deep pullback. You could do whatever you want with your entries. A lot of folks just love to buy right there because they don't want to miss out on that big breakout runner. Those occur sometimes. Those are what I call slam dunk winners. You don't want to miss out on those. But by the same token, maybe you find a market where you want to wait. I mean, it's not very often that the Euro USD sees a big move. This one right here was just a flat breakout beneath this year's low. That's why you got that washout right there. That's why the volume entered the market. This is liquidity sweeps. What happened? All those stop losses from retail longs got eaten up. Those are fairly rare, but now we're chopping sideways. So if that right there was your signal, could you buy down in here? Yeah, of course. Why? Because my trade hasn't been violated yet. Why hasn't my trade been violated? Well, right there, you've got a swing low. You could have used that as a very tight stop loss. Where would your profit target be? Maybe the top of market structure. You could do something like that. You could also make it a static 1-to-1, maybe something like that. So if I'm long from 104.06 and my stop loss is at 103.82, what do I need to get to the top side? What is that, 24 ticks? So we got to get 30, somewhere in there. I believe that's correct. So if that was my entry, well, my profit target would be somewhere right in there. They call that trading the middle. We're doing business right in the middle of a compressed range. Realistically, it means absolutely nothing. If we go up and hit this stop loss, we will have to see, that profit target, we will have to see a significant break in price for this to happen. So if you're scalping, 1-to-1s are pretty good. They're pretty good, especially with something like this. Now, if you wanted to use this to take a position trade, then you can put your stop loss beneath that liquidity sweep. You just got to make sure that you get paid for your money. I like playing tighter because I like to win more. That's all there is to it. I like to win. I don't really like to sit around and, I hope nothing happens over the weekend when we know it is going to. So that would be a good example of a 9 EMA with RSI, and that thing is in play right now. Let's try it on a real short time frame, and then we're going to move on to the next strategy. All right, right here, this is a 1-minute E-mini S&P 500 futures chart. I really want to sort of see if we can get a trade going and spot one for you guys live. This is a real challenge doing this live because a lot of times things don't line up for us. Right there would have been a trade, oversold territory. Definitely you wanted to buy, and then where would your buy have been? Your buy would have been right there, and it was a pretty good trade. So right now we would be looking for something really to rally, give us a shot to sell this thing. This is a 1-minute chart. Let's go right up to this US 30. US 30's been on the move. Still, Right there would have been a pretty good trade. You were looking to sell. You didn't quite get your close. That would have been close, but you still have a sell signal right there with your RSI. I would say probably that candle right there, but it's really close. So if you guys want to learn something, just a hot tip, if you're going to trade this way, don't do it when it's right on the line. It needs to be clear. Something like this, maybe something like that. Something to think about, guys. I mean, you can trade these things any way you want. I'm not going to sit here and give you a bunch of rules. I'm just telling you, 9 EMA is your trigger, and you want to qualify your trades. And if you qualify your trades using RSI, this is how you do it. And then right there, that would have been our bid. That would have been your oversold territory. Right there would have been your bid. I would have probably waited for that one right there. Maybe a pullback to my line. But you can see you made a real nice trade. Right now, though, not really a whole heck of a lot we can do on this time frame. We've got to wait for that RSI to get up over 70. Let's go right here. Let's go down to a gold. Let's look at gold futures. Gold's on the move. No question about it. Going into the weekend, I fully expect this thing to rally. We're going to go over some Fibonacci's here in a minute and show you what I was thinking yesterday. We actually had a real nice buy. We just missed it. It's tough. But in any case, right up there, we're looking for the RSI's got to rally just a little bit. So we've got a lot going here. We just don't quite have any ends right now. This crude oil trade, this is entering overbought territory. So we're going to look to sell after we get above 70, which we're right at now, and then maybe we can revisit this one in a few minutes. All right, that's the 9 EMA with confirmation, with RSI confirmation. Next one we're going to cover is the Bollinger W. Now, I like the W. I like Bollinger Bands, and I like the Bollinger W, and the reason why is it lets us try to pick a bottom. So you're going to go to strategies inside of the trading room. You're going to go down to Bollinger W, give that one a click, and you're going to see this screen right here. I'm going to give you sort of an outlook of what to expect, and then you've got your description, your learning resources, which is right beneath the video. Click Learning Resources, and you'll get a PDF. A Bollinger W is very simple to spot. You're just going to look for a downtrend in price beneath our lower Bollinger Band. I'll tell you the settings here in a second. First low is going to be outside of the Bollinger Band. There's your pullback inside. Your second low is going to be inside of the lower Bollinger Band. This is a double bottom formation. Just think W. If you're a football fan here in the United States, Washington Commanders or UW Huskies, University of Washington Huskies. W, double bottom. What we're trying to do is pick a bottom and get long. Now, the number one thing you're going to need to do if you're going to be successful with the W is you're going to have to, number one, find markets that are trending south, and number two, dial in the proper time frame. If you're trading Forex, I recommend a 4-hour chart. I really do. Now, if you want to go down to a 30-minute, you can. If you want to go down to a 5-minute, you can. Just remember that on the 5-minute, even though your risk is going to be lower, your stop loss location, it's not going to cost you as much to make the trade. It's a much riskier trade. So we could say we're risking fewer dollars, but we are taking a riskier position, meaning we're going to lose more than on the longer time frame. So right there, that's a good look at what a successful W is. Right there, this is the most important thing, your entry. Now, anybody can sit here and say, okay, there's a low outside of the Bollinger Band, there's a pullback, the low's inside. Where am I going to enter? You've got to wait for a large bullish candle. Now, I'm going to show you a trade that we have going right now in the Great Britain Pound USD. And it's, functioning okay. But I'm going to show you a little bit of the nuance on the entry point, and that's very, very important. But just think, you've got to see some green. You got to see some large bullish candles. If you get those, you can get in. Let's see. Yeah, Bitcoin's at 99K. The unclenable, that thing's going to 100. There's no question about it. I'm curious what happens at 100 for Bitcoin. We'll cover some Bitcoin at the end. In any case, right here, strategies, if it's successful, relatively simple to see. Let's look at some in the live market. We can sort of give you a quick primer on these things. This is what we're looking at here. This is our W strategy. This trade was placed fairly accurately. I was watching this over about the last hour and a half. Okay, there's our W. Now, remember, our settings on our Bollinger Bands, and all this stuff's in the PDFs. Just go ahead and check the PDFs out, show you how to trade it. Bollinger Bands are going to be sort of the factory settings. A periodicity of 20, an SMA, just a simple moving average is what you're going to use there based on the bar close with a standard deviation of 2. The standard deviation of 2. So for me, I'm going to take a good look at this and say, okay, is this a W? 100%, an absolute 100%. Let's go ahead and shut my order DOM down. There was your move. You sort of saw a move here. Sort of a big negative move, but your second low, you don't really get it. That's not much of a pullback at all, more of just compression, and then a reversal. This is what we're looking for. Nice big bearish move. There's your first low outside of the lower Bollinger Band, and then you pulled right back into here, and that's sort of the top of your pullback, and there's your second low right there. It should look like a capital W. Okay, so if we do this, Bang, bang, bang. That second low, this is where things get a little bit dicey. Okay. Could I have entered right here? And let's just sort of blow this thing up. I want a large green bullish candle. And I want the body big. I don't want anything wicky. No wicks. No. Why? Take a look at the size of this compared to this. It's an inside candle. It's about what? Maybe half the size of this entire sell-off here. And then you get the break here. I would have been looking to go right there. Right there. That candle. You'd add back-to-back. Nice body, nice green candles. This is a 5-minute chart. This is a 5-minute chart. So what I would recommend is waiting for that confirmation. So if this happens to you, big bearish candle, sort of a rotation, nice green candle, and nice green candle, that's going to put you in the kill zone. Now, some folks trade this till you know once we break above sort of the neckline, what you'd call the neckline or the pullback area, that's when they go long. I prefer the bullish, just a big bullish candle. That would get me in. So this W right here has been successful. It really has been. So the stop loss, where am I going to put the stop loss on this strategy? I'm going to put it right beneath the low of that W, which is right there. Bang. That's going to be my stop loss. My entry point was right here. What's my profit target? Top of market structure. You could do that. Where do we get long at? We got long right there from 125.19. My stop loss is down there at 125.06. It's 13 pips. So what would my profit target on a 1-to-1 be? 32. It hit my 1-to-1s. Now, if you want to keep this on for a 1-to-2 or a 1-to-3, try to pick the bottom. Go right ahead. But the thing that I like about that is it really does sort of nail the top of this 5-minute market structure. I'm going to go ahead and take the money. We'll see what exactly happens. Remember, these are demo dollars, but you definitely can see what's going on here. You sort of got a short-term bottom there on the Great Britain Pound USD. Not bad. Not bad at all. So let's see. Let's go with we need something else that's fallen today. We need something that's fallen. Let's try to get in. All right, natural gas is way down. Why do you think natural gas is way down today? It's a peace deal. They're negotiating a ceasefire in Florida. I almost guarantee it. You can see that written all over the price action. You really can. And let's cross our fingers and hope that's the case. We just got to wait and see right now. Natural gas, let's go to a 30-minute chart. There's a W. It's not an easy one to see, but it's there. Remember your rules when you're quantifying these things. Got to remember. Big bearish move. Check. First bottom outside of the lower Bollinger Band. Check. Pullback. Check. Second bottom. Check. The second bottom can be lower than the first bottom, but as long as it's inside of that lower Bollinger Band, it's guns up and you're ready to trade. That's a trade. Where would your entry have been? Right there. No question. How's it going right now? Not real well. Not real well. You're looking to get that price extension up and through, somewhere up in there. 30-minute chart, natural gas is the bottom end. That's the question. Can we buy right now? Oh, we consider it. All right, so we bought right there. The entry point would have been right here, right on that big bullish bar close. I get this question a lot on the W. Shane, can I wait for a retracement into the W to take the trade? Yeah, you could do that. The biggest problem you'll have with doing things like that, if you get away from sort of the conventional entry, is that you're going to miss a lot of these that just break out and go up. You're going to miss a lot of those. The idea behind getting in after that big green candle is because we've got momentum, we've got confirmation that potentially the bottom's in, and we're ready to rock. However, there's nothing wrong with going in right down in here somewhere, maybe 50% of the W. There's nothing wrong with that. Now, just remember where your stop loss needs to be. In this case, it's obvious. You just put it right beneath the second low, which is the W. So don't get caught thinking that a W is just bang, there's your low, there's a pullback, and the second low has to be above the first low. That's not true. The second low can be below the first low. The key is that it's got to be inside of that lower Bollinger Band. If you can find those, and a lot of people love this kind of W a lot better than a conventional W because it really does show, hey, big time bearish move, pull back, bang. We're still going lower. We stall out here. Now I've got a chance maybe to get in on the bottom or closer to the absolute bottom of the market. Will this trade work? I have no idea. No clue. There's a lot going on in the news cycle today. I mean, anything can happen. If you do see tensions ratchet up or something, then the natural gas could skyrocket. If you do see a peace deal or something or a ceasefire announced today, then you're going to see a big-time bearish pressure on natural gas. Fascinating stuff. Absolutely fascinating stuff. When let's see, who was saying, yeah, Drede, like Drede said, it's been a choppy week because we got market drivers that are everywhere. We have geopolitical market drivers are dictating everything, and it's such a complex situation. Very hard to trade. Very hard to trade. So that's a good look at a W. That's 2 Ws. We'll keep an eye on this natural gas trade and see what happens. Okay, here's our, let's see, crude oil, not quite into overbought territory just yet, sort of fiddling around up there. Euro USD still in pretty good shape. We're sort of breaking north, so that trade doesn't look too bad. And then this gold trade, do we want to sell? Okay, here it is. All right, 1 minute chart on gold. Gold futures, December gold futures. There's your RSI confirmation. You're in overbought territory. We want to sell. Is that good enough? No, it's not. We're waiting for a 1 minute bar close beneath the 9 EMA, and then we pull the trigger and go short. Looks like we're going to get it right here on this 1 minute. Let's see, 55 seconds. We're not going to burn a whole lot of airtime sitting here waiting for this thing to set up, but you can see our trade already developed. Right there, you're going to put your stop loss just a few ticks above this. I always recommend putting it at least a tick or two above that, pad that. I don't want to see anybody get hit and then watch the market reverse on them. That is the most frustrating thing in all of trading. It'll drive you crazy. It makes a lot of people jump out of buildings. Oh, I got stopped out, and then the market went in my direction. So what we want to do is we want to make sure we give it at least a pip or two or a tick or two if you're trading futures right on top of that swing high or beneath the swing low. That way you're sort of got that insulation where you don't get hit and then watch the market reverse. Always remember, swing highs and swing lows, everybody can see them. Everybody can see them. And so you're not really hiding. You're showing your hand. Everybody knows that there's going to be orders up there, and typically the market runs, takes them out, and then reverses. Honestly, that's a big part of the liquidity sweep idea. So in any case, right now we got that oversold. Okay, we're looking to sell. We want to get a big negative close underneath this 9 EMA, and I'm not really going to wait here all day to get it. But you can see that would be your stop loss, and if we move higher, then we're just going to put it above that swing high, and we're just going to sort of come back to this one and see. I would like to execute this thing, though, in real time. We just got to get a big negative close, and I don't know that we're going to get it. All right, we got one more thing to run over, and I'm going to sort of give you just the basic primer on my approach to trading, basically. Fibonacci retracements, those are my weapon of choice, and my strategy is called the Fibonacci Counterpunch, and it's not patent pending or anything or trademarked. It's just a name that I came up with it. The reason why is called the Counterpunch is if you're a boxing fan, then you understand that we're waiting for somebody to commit, and then we're gonna base our next movement off of that commitment. And with price, we're waiting for a pricing move, we're waiting for a pullback, and then we're gonna get involved. It's that easy. It's very simple. It's not rocket science. Okay, premise is to capitalize on retracements of price. My key levels, the ones that I use, are 38%, 62%, and 78%. I don't use 23.6%. I've watched guys lose a lot of money trading 23.6. Now, remember, 50%, I don't like trading either. It's too obvious. Basically, everybody knows where it is. And if, in fact, I'm going to trade a 50, I need like my 13 EMA to be there, or maybe a Bollinger Band, or maybe multiple time frames to line up my Fibonacci's. The objectives here is not to call a market reversal. I want to identify market state. I want to quantify a useful range, a trading range, and then I want to dial in my scalping levels. That's what I want. Market state. Very simple using this strategy. A trend is valid. The market is trending when price is above a 38% retracement or a 62. It's a strong trend if it's above 38. It's still a technically valid trend if you're above 62 or above or below. Remember, we trend up, we trend down. So that's the biggest thing to remember there. 78% is the line in the sand. 78% is the line in the sand. That means that if the 78% range is taken out, if that retracement level is taken out, then more than likely you're going to run at that swing low and really get after a big time change in market structure. They call that a BOS or a break in structure. Ranges, very simple. I'm either going to use the most recent spike to spike, the most recent swing low to swing high, or I'm going to use a time-based range. I use a lot of time-based ranges when it comes to the U.S. session, but spike to spike, the most recent spike to spike, gives you a good opportunity to succeed as well. And this is what a spike is. I got a lot of questions about, Shane, what the hell is a spike? I go, well, here it is. Right there, a spike is just a 3-candle pattern. A spike low is going to be, there's your first candle. Your second candle is going to be the lower extreme, meaning that lower extreme, or its candle, that candle's bottom is going to be lower than the first candle, and it's also going to be lower than the third candle. It's a 3-candle pattern. Essentially, that's what it is. A spike high is exactly the opposite. You got candle 1, candle 2, candle 3. The second candle is the one that is the upper extreme. It's basically just swing lows and swing highs. That's essentially what it is. All right, let's take a good look at what I was looking at gold yesterday. We really wanted to pull back down there to 2680. I thought we had a good chance. I put this trade idea out this morning, and we fell just short. We wanted to buy somewhere down around there, right around 80, somewhere in that zone, and then just get that quick bounce up to 85, and we just didn't get it. At the time I put the trade idea out, I thought we were going to get it, and we didn't get it. So now price is what? It's rocking and rolling north. Right here was my idea, was my spike low right there. There was my spike high. That would have been an entry point. If you wanted to be aggressive, you could have taken that one. I wanted to back into what we call the golden zone, the area between the 50 and the 62. I wanted that bid bad. So right now, what can we say? Well, we've got to change our time frame, probably to a lower one, I would say. But your 4-hour chart's going to give us a chance to trade early next week. Let's go down to a 30-minute. And, it's just that this is the trend. You're breaking out yet again. You're breaking out of this gold market yet again, and we're moving higher. That should not be a shock to anybody. Now, in one respect, you say, hey, that a peace deal may be imminent, and why is gold going up? Because anything can happen. We're going into the weekend. There's no rhyme or reason for a rally in gold today other than it's Friday. It's Friday. And a lot of people that have a lot more money than you and I, they say, we're going to buy some gold before we go home for the weekend. That's called a hedge. That's diversification. So if you're long stocks, what's the problem? Why not go long gold a little bit? Because if you do get that gold, or if something bad happens and stocks come down, and we know gold's pretty much going to rally, it's been a solid sort of inverse correlation during times of crisis in the past. But right now, everything just seems to be going up, and don't ask me why. Don't ask me why, but it is. So right here, you've got a nice rally in gold. I mean, if we wanted to scalp, I'd love to just get a good scalp trade for you, but these things take time to set up. That would have been a good one right there. 5-minute chart. And not doing it live is sort of problematic in a lot of ways because you don't get to actually show you guys how these work. We do some of this stuff like right around key events where we know we have volatility. We may get one right here. Okay, the trend is clearly on. 1-minute chart, top of market structure. You can see right there, there's sellers there dug in. What could we do right now with the Fibonacci's? There's my spike low. That's sort of that inverted hammer. What do we got right there? Okay, that right there is a doji. I would have a 38%. Do I want to take this trade or not? I mean, if in fact we do get it, I got something else going on here. But you can see right there what we're trying to do is we're trying to get pullbacks and then potentially get in on those rallies. So what else can we maybe look at here to give ourselves a trade? Well, I mean, gold may work. Something like that. So your bid would be somewhere right just around 27.1076 right now. Let's see right here. See if I can get in. Let's go right there. So what we want is a pullback right now. Turns into a waiting game. We know the breakout is on. The bullish breakout's there. What we're looking for is a pullback. Pullback right down into this area. So if we're going to trade this thing, we're going to try to hit this with a market order. If we get it, we're going to be on the buy side of this thing. There's your pullback. Right around 27.11, I would say is good enough, and we're just looking for a quick hit or a nice little pullback scalp to the long side. Once again, I mean, we can sit here all day waiting for one of these things to set up, but I think you guys get the meaning. Does this trade have a good chance of winning right now? Yep. Why? Breakout's on. Nice sort of, I would call that a demand zone right there out of that doji. Let's see if we get a shot right here. 1-minute chart. Kind of tough. There's, okay, inverted hammer. That sort of tells us that maybe we'll get a shot right here. Let's go ahead. Let's go to a buy limit, and I want that from right around. I want it close, so let's go 11. No, we don't want that. We want right. Yeah, right there. Well, there's your buy. That would have been your buy. Can we get the golden zone right there? Let's try that one, golden zone. Remember, 1 minute chart's tough. Right there would have been your bid, and you could see that bounce right there. So you could have easily set this trade up to be, okay, I'm buying 27, 10, 90s. Stop loss could have been beneath your golden zone, somewhere down in there, or beneath the spike low as a whole. You can see we were just a little bit late to the party. That 62% would have given us a pretty good scalp. The 38% still alive. In my view, I think we're going long. Kind of tough to scalp spot gold with that spread involved. I'd much rather do that with gold futures, but that's another video for another time or a live stream. But right there's the pressure. It's tough. 1 minute charts are tough. Now, what exactly do we expect to happen here? We sort of got our scalp there in the middle of the zone. What's 78? 78's the point of last return. If 78 doesn't hold, then you're going to make a run at this spike low. So if in fact you wanted to go long, you could just go with a buy. But look, I mean, look where we get filled with this spot stuff. This is tough. But your stop loss would need to be underneath that spike low. So that would be playing this in its entirety, meaning you're trying to get on a market structure. You've got to have somewhere to put your stop loss. Right down here would have been it. You'd have been looking to buy these retracement zones. It's just really tight. Top to bottom, what is that? About a buck 75. And you can see just how big the spreads are when you're trading something like spot gold. I mean, I don't even know. Is it worth it? Can you overcome the spread scalping a 1 minute chart? Probably not. I'd be looking at a minimum 5. A maximum granularity of about a 5 minute chart. But as far as that, it's an interesting trade. Let's go back to our gold. Right there, your gold. Sort of there was your sell, and then there would have been your sell order according to that RSI. But if you wanted, let's say, to go ahead and play this gold futures on maybe using the Fibonacci's, something like this. 5 minute chart. Gives you a much better chance of success, 27.10. That'd be a pretty good scalp. You just got to come off a couple bucks. But I like gold futures a lot better than spot gold just because you don't have that spread. You don't have the spread to work with. See that? See how tight the market is? Bang, bang. You don't have that. We can go back to spot, though, and see what happened to that trade. I mean, is it up? Is it down? Let's go to our 1 minute market structure. Questionable. It's questionable. Let me see. Unclenchable. How do you pull up the golden zone tool? Yeah, you just got to modify it a little bit. I mean, if you're using TradingView, you're just going to go to your Fibonacci's. You're going to have that. You're going to go ahead and open up. I got a bunch of templates built, but you're going to open up, say, your settings right there. And then what you'll do is you'll just put some shading down there. So you'd have visibility. And then I believe there's somewhere you can shade. Yeah, right here. You're going to use the background. Go ahead and click that, and you can just go to your levels and then just shade it accordingly. And that's what I've done here is just sort of say, okay, we want between 0 and 38 green, 38 and 50 green, 62%. We're going to go ahead and shade that with an orange. And that just sort of tells me that it's the golden zone. We put a video out on golden zone trading not too long ago on the How to Trade YouTube channel. Go and check it out. So, I mean, we're not going to go ahead and claim victory on this. What we are going to do is that this trade really shows you what the deal is. Now, the 38% didn't really work. 62%, it worked all right. I mean, look how tight these zones are. And with the spread involved, you're going to have a little bit of trouble scalping this tight, but it works great on something like a E-mini S&P 500 or something like that. But you can definitely see that the 78's the line in the sand. So once 78's gone, you're going to run at 27.09, which is going to be your swing low. That's almost a guarantee. So if you want to do that kind of trading, that's there. Let's go back to our Euro USD. Still just sort of flatlining. That shouldn't surprise anybody this time of day. And WTI crude oil. Okay, right here, we were in overbought territory. Now you're going to get sort of that negative close. Are we above 70 right there? Good enough for me. There's our trigger. We're above that 70 on the RSI. Now all we're waiting for is to get a nice negative close right here, and then we can send them. What I mean by send them is then we send our sell orders. So what we're going to do here is we've got our order book. We're going to go to a market. We've got sells. We got a unit. And if we get that close right beneath that zone, right beneath that 9 EMA, then we're going to sell it. Now, the reason why I think this one has a pretty good chance, even though we're sort of trending. Time of day, you've only got about another hour of maximum trade in WTI until about 2:30 p.m. Eastern, and then the volume's going to dry up into nothing. There's a good chance that we could pick the top doing something like this. So remember, we're going to be right there with our stop loss. Stop loss is going to be right above that swing high, which is going to be 71.41. So we're going to put that thing up at about 40.43, somewhere in there, 2 ticks, maybe 44, whatever. At that point, you just need to get your stop down. And then right here, we're about 30 seconds away. We just need a negative close, and that's going to be our trade. Now, our profit target, we can do anything. We can do a 1-to-1, say a 24 tick, so something like this, or we could try to aim for the bottom of market structure, which is down here, and just sort of bet that the top's in for the day. That's not a bad way to do it either. Entry point, we could sell right on this bar close, or we can wait for a retracement. We could certainly do that. Something like that. Did we get the close beneath it? Looks good enough to me. Bam. Sell it. Okay, there's your sell. Sell, relatively straightforward. We're short here. If you want to wait for a retracement to sell, you could. Stop loss is going to be nestled right up there, and we're going to see if we can get a little bit of negative price action here towards the end of the trading day here in the United States. All right, guys, that's sort of just a strategy crash course on about 3 or 4 different strategies. Personally, I'm partial to the one of the ones that I really like is this Bollinger W. I think that if you dial this one in and use just prudent risk management, you're not going to get in trouble with it. And it can also lead to some big profits if you're successful taking bottoms. And the other one I'm partial to is the Fibonacci's here, the Fibonacci retracements. Remember, 1 minute trading, that's tough. I would be looking at 30 minutes for most futures contracts during the U.S. trading day. And if I was using this on, say, a spot gold or a Forex pair, 4-hour charts, daily charts, and remember, multiple time frame analysis, monthly, weekly, dailies, those can turn out to be just fantastic trades. And the longer time frame that's in play, typically the greater efficacy of the Fibonacci level. Been trading those for about a decade. And if you do it right, it can be really good. If you do it wrong, it can be really bad. That's all there is to it. All right, everybody, I'm going to sign off for now. That was a whirlwind 40 minutes of strategy stuff. I thought it was a good day for a strategy. We're going to go ahead and get after it again next week. This was an epic week. If you lost money this week, don't worry about it. Don't worry about it. If you lost a ranch, typically you're going to have to go find another ranch before you can go trading again. But this was an incredibly difficult week. The geopolitical uncertainties dominating everything. We don't know what's going to happen here. We do believe that there is a ceasefire deal in the works. Let's use our heads here and look what happened. We saw some long-range missiles get shot into Russia on last, Sunday and Monday. U.S. missiles and U.K. missiles, those went into Russia. And then what did you have? You had the promise of a retaliation. You had an ICBM, which was a new weapon that they hadn't seen, really, a short-range ICBM that was shot back at the Ukraine. Hypersonic missile that was going Mach 10. That was sort of the gauntlets. And listen, we've got that kind of weaponry. That's what Russia said. And now you've got the NATO chief is in Florida meeting with President-elect Trump. There's something cooking here, and that's why stocks are up. That's why natural gas is down, a huge export from Russia. Cross your fingers, say your prayers. Hopefully we can wrap this thing up. But if things escalate over the weekend, if there's another ICBM or if things are out of control and there's war declarations handed out and you start to see NATO troops getting moved into the Ukraine and you see Russian troops sort of moving towards some of those NATO countries, gold immediately spikes above 3,000, no question about it. Crude oil will go right away. Crude oil will go probably, we're trading 71 right now. You'll see a $10 jump if that's to happen at least. It'll go up to 80, and then from 80, it'll go to 100, and that's just all a bad situation. Natural gas will explode up into the 4s, mid-4s, or 5s. And then Bitcoin, the real question is what happens to Bitcoin? Bitcoin's rocking and rolling at 99,000 right now. Who knows what a Bitcoin's going to be worth? It could be worth 250,000. Nobody knows. So we're gonna buckle up and find out. All right, everybody, I'm going to go ahead and sign off. I want to thank everybody for joining us this week on YouTube. That's great. Swing by the trading room. Say hi. Everybody in the trading room. Another week, huh? Another day, another dollar. Have a fantastic weekend. Finish up today's session strong. These strategies are just a sort of a jumping off point. Use your own creativity. It's your greatest asset as a trader. All right, everybody, that's it for me this week. You have a fantastic weekend. Trade the action well, and we'll talk soon. See ya.